morning, everybody. This is Mark Stewart, Media Past President here at NCCPAP, welcoming you to our 8th NCCCPAP Now event, which is really exciting for us. It feels like just yesterday we started these. For information related to CPE, please direct them to Alex at our national office. Just one important thing to note, if you haven't seen it already, we've recently undergone major software upgrades at NCCPAP, which will require you to reset your password the first time you log into the website. So if you haven't logged in for a long time, select the Forgot Password link to be able to get into your CP and other information on the website. Again, any questions, any trouble, feel free to reach out to our national office and we'll help you out with that. Very important to note that you have your first and last name in the Zoom software. That's the only way we can correlate your poll question answers and award your CPE credit. So please check that now. And if you have to make changes, please make them now. Again, any difficulty with that, please reach out to us. There will be 6 polling questions during the event. They'll be on the screen for about a minute. Please be on the lookout for those, as you do need to answer those to get CPE credit for this session. If you have questions for speakers, please post them in the Q&A. Although you will see the chat is exactly that. It's meant to talk amongst yourselves. Try not to post questions in the Q&A. If you do, we will be monitoring it, but we might not catch the question that you have. So please use the Q&A for that. Also of note, this session will be recorded for you. The recording will not be available, obviously, immediately after the session, but shortly thereafter, we will send out a notification to all of you, and you will be able to access the recording to watch again whenever you feel the need to. You'll also see here a link to the resources for today's events. You can either copy or click on these. If you have not yet downloaded the PowerPoint slides, you can go ahead and do that now. There are also links in the chat that will also take you to the slides for today's events. Before we get into our presentation, I just wanted to make a couple of quick announcements related to NCCPAP events. Next week in Nashville, we'll be hosting our quarterly meetings, which will be Thursday and Friday. Particularly our Issues Committee meeting and our Tax Committee meeting will be expounding on a lot of the subjects we'll be talking about today in a more long-form format. So we do recommend that you register for that. That is available on Zoom, although we love to have everybody we can down in Nashville. You can attend those via Zoom, so please register for those as well. Also of note, next month, November 15th, 16th, and 17th, is our ATS conference run by our Long Island chapter, Nassau Suffolk. Always a great event. I highly recommend that you register for that event. If you have registered already, course registration is available to select your courses. So if you haven't selected your courses, please do so, as the slots do fill up very quickly. Polling question number 1 will be launched shortly. It'll be on the screen, like I said, for about a minute. So please take a moment and answer the question. There is obviously no wrong answer to the question. You just need to register your answer. All that poll question is on the screen. We'll give you a little bit more time to answer that. But we'd like at this point to bring in our first speaker today, Frank Sands, who I'm sure all of you know is our wonderful NCCPAP president, and will be leading us into year 2 as president. Has done a fantastic job. Frank will be giving us some latest news related to the profession, also be giving us an update on the CPA pipeline, and also very importantly on the Statement for Standards for Tax Services. All very important topics. So Frank, I will give you the control now.
Thank you, Mark. You're very generous. Welcome, y'all. I'm glad you tuned in. Hopefully you'll find this session formative and get something out of it. Okay, next slide, please. Going to talk a little bit about a couple of latest news things. Number one, P10 fee has changed based upon the district court Steele decision. The fees are broken out between what it costs the government and what it pays a third-party processor to handle all the records. So that's just a little piece of information, a little bit of a break for us. Next slide, please. Tax Pro account has had some improvements. You got to have a CAF number. You can do your POAs online, automatic registration with taxpayer approval. You can manage your POAs, and there's the IRS.gov website that you can go to find out more about it. First topic now is the CPA pipeline, the plan. 6 considerations: awareness, improved perception, training, education, firm culture, DEI, and educational institution partners. This has to do with the shortage of accountants and CPAs available. We all probably know that, and some of us have experienced that in trying to fill our staff. Awareness has to deal with improving the awareness of what an accounting degree will get you, what the profession can provide for you, and what becoming a CPA means. Improved perception goes along with that, in that we've got to communicate to potential students and candidates of the benefits of a CPA and accounting degree and all the different types of opportunities it brings. Training and education means that the training has to be focused on accounting degree. Education means twofold: education in the accounting field and also an education on the opportunities that are available. Firm culture. If we're going to change this process, then the firm culture needs to be changed. And that is, perhaps we need to communicate that it's no longer a 60, 70, 80 hour a week job, that some of these things can be done in 40 to 50 hours. That's the hope. Diversity, improvement has to go to increasing the overall diversity of all accounting students and CPAs. Educational institution partners, that basically means that we've got to get the educational institutions on board with regard to this pipeline project. Next slide, please. Thank you. Number of accounting grads have plummeted. We've only a 7.8% decrease in bachelor's degrees in accounting and a 6.4% decrease in master's degree. There are less people available, less people going for this degree and this training. That's a problem. AICPA created the National Pipeline Advisory Group, and that's a combination of the AICPA, state societies, NASBA, stakeholders, businesses, CPA firms, all from small to large. And what they do is they provided input and concerns that eventually resulted in the finalization of the Pipeline Acceleration Plan. CPA pipeline, one of the provisions or one of the initiatives, shall we say, is the Experience, Learn, and Earn program. And what this is designed to do is to create an alternative to obtaining 30 credit hours that will qualify you for becoming certified. Bachelor's degree in accounting is required to enroll in this program. Typically, this will be the paid first-year staffers. They will be provided a flexible work schedule whereby they can do work that they get paid for, and at the time take online courses that will result in 30 credit hours that will enable them to become certified. And also part of this process is that the 30 credit hours will count towards CPA exam classification in all jurisdictions. It requires state board acceptance, of course, because the state board has a lot to say about what kind of hours are involved and what will be accepted in order for certification to be given. University and college participation is required because they're going to be the ones administering or providing these 30 hours of online courses that will qualify you for your certification. Firm participation is necessary. The firms are going to be the ones that are paying these first-year staffers, and part of that job will be to take these 30 hours of online courses. State societies will have to be on board with this program, and I think the answer, or the reason for that is obvious. CPA pipeline, firm culture, business model toolkits. AICPA recognizes that the firms that are going to be involved in this program and want to participate are going to have to change their culture and their business model. In order to help them with that, the AICPA has issued model toolkits that deal with strategy, compensation, services, staffing, career paths, and work-life integration. All very important issues with regard to hiring and maintaining staff members who are committed to your firm. There has to be a strategy involved in doing this. The compensation levels are going to need to be adjusted. Right now, there's a certain feeling that compensation levels for CPAs is not where it should be. Perhaps that needs to change. Services. It's important for the firm to be able to continue to offer the services that they need to their clients, and also have their staffers participate in this program. That means staffing has to be balanced so that if the first-year staffer is not working on a certain project, that there's other staff members to fill that hole and to do some of that work. Career paths. It's important to provide a career path for the staffers within the organization. That helps maintain loyal employees. Work-life integration. We all know that work-life balance is very important to young folks, and so that's going to have to be part of the firm culture consideration. CPA pipeline, another initiative. STEM recognition. STEM is an acronym used to identify courses or course study that is available for federal funding for K through 12 grades. It's largely mathematics and science at this point. What this initiative is to try to get accounting as a STEM field or a STEM study. And this would open up grant funding to be used at the K through 12 level in order to encourage awareness of the CPA and accounting professions and to provide for focused education in attaining those goals. These courses can be technology focused for an accounting degree. Political has published an article, 7 Reasons Why Accounting Should Be Part of the STEM Field. I suggest that you all access that and take a look at it. It's a good article. And right now in Congress, there is the House Bill 3541 and Senate Bill 1705, which are largely the same. And what it does is provide for official recognition, of accounting studies as part of the STEM field. And we should all support that. The AICPA has a method for you to do that. AICPA has got high school and college initiatives with regard to the Pipeline Acceleration Plan, free membership. AICPA has a website called Start Here, Go Places. That's for folks to log in and take a look and see what the potentials are and the possibilities are with an accounting degree and a CPA. Webinars on exciting careers are included in that, and I have not looked at those, but I understand they are quite good. There's also a posting on TikTok, This Way to CPA, which deals with the benefits of obtaining a CPA designation and how you do it. There's also a push for AP courses. This will be facilitated once the accounting course of study has been qualified as a STEM course of study. Understanding in this case is a two-way street. Not only are we trying to communicate to potential accountants and CPA candidates of the benefits of becoming a CPA and obtaining an accounting degree and all the opportunities it can bring, but it also means that we've got to be cognizant of the needs and desires of those same students who are considering doing this. Other initiatives from the pipeline. There's a 30-hour best use initiative, and what that means is for the educational institutions that are going to promote 30 hours of online classes that will qualify you to become certified, that these 30 hours can be focused on, and as an example, whether it's technology, whether it's taxation, might be auditing or financial services, they would be focused so that it would maximize the benefit for those who want to become CPAs and select one of those particular areas to become more knowledgeable in. Also, in consideration that first-year staffers will be taking time to do these 30 hours of education, that there is now a 30-month window to pass CPA exam instead of the old 18-month window. There is some concern about the consistency and the variations that we have in the various accountancy acts that are adopted by the state. That's being worked on to try to minimize those differences because it raises confusion. The question is, okay, what state should I become certified in? Some of those issues are out there, and by making the Accountancy Act more uniform throughout the country, that should eliminate those questions. AICPA Foundation, that's being very active in promoting these initiatives, and what they're trying to do is refocus their funding more toward accounting degrees and in some cases toward secondary education. They're being very considerate here. So hopefully all of these initiatives will combine to help with the CPA shortage. Polling question number 2 is now up on the screen. Give you a few minutes to respond to that. Now we're going to deal with statement on services, or statements on standards for tax services, excuse me. This okay, get the right slide. There we go. The poll question down. Tax Executive Committee issued these statements. They're effective for January 1st of 2024. There is an extensive explanation that is foremost in the statement document, and there are 4 statements. Statement on standards, statement number 1 is for members providing tax services. It's 4 sections: advising on tax provisions, knowledge of errors, data protection, and reliance on tools. Statement number 2 is for members providing tax compliance services. That has 5 sections: tax return positions, questions, reliance on information from others, use of estimates, and position departures. Statement number 3 has an introduction, standard, and explanation, and it is for members providing tax consulting services. Statement number 4 is for members providing tax representation services, has an introduction, a standards, and an explanation of those standards. Key points. The next few slides will deal with the key points of each one of those standards. The explanation talks about why these standards were done, and it is a major reorganization of the old standards we've had, and it's reorganized by the type of tax work that practitioners do. The old standards, all of them are incorporated in new standard number 1 and new standard number 2. Standard number 3 and 4 were considered especially unique, so therefore there's a separate standard for each of those. Data protection is new. The old standards didn't deal with it, and reliance on tools is also new. Key points of statement number 1. Tax positions require good faith belief and realistic possibility. Now, if y'all remember, there was a kind of a more likely than not success of prevailing in the old standards. Now we have good faith belief and realistic possibilities. It deals with disclosure. To whom do you disclose your issues and when? It also deals with informing the taxpayer of any errors that you may find. It does not deal with the requirement of notifying tax authority because it pretty much doesn't have one. Your obligation is to notify the client. In certain cases, if you find errors and you recommend to the client how they correct them, if they don't want to correct them, then you may be in a situation where you have to consider engagement withdrawal. And also, if the errors that you find are substantial enough that they could be considered fraudulent, then you have an obligation to tell the client they maybe need to see an attorney about it. Again, the legal referral requirement is not to taxing authority. Continuing with the key points, reasonable effort to protect your data. I think we have already got that, folks, in what we have our WISP programs. Use of professional judgment. We see that term interlaced throughout this entire set of standards, the use of professional judgment. Now, we use professional judgment to rely on tools. In other words, you're going to select a tax program or select some kind of research software. You should do your due diligence so that you have a professional feel that these tools will do a good job that can be relied on. All other standards and regulations should also be considered with regard to statement number 1 and all its provisions. Key points of statement number 2. Remember, there's 5 sections of this statement. Tax return positions. Basically, a tax return position is what you show on the return as you complete the return. You need to consider all regulations and rules. And they caution you to not play the audit lottery. What does that mean? That means you can't tell your clients that if their business use vehicle is less than 80%, the IRS won't look at it. We just can't be doing that, folks. Remember, good faith reliance on others is the standard. Good faith and reasonable basis. Other key points for standard number 2, underlying documents. While the standard doesn't require that you see underlying documents such as 1099s or 1098s, it encourages you to request copies of such documents and keep them in your record. estimates. They can be used, and they must be based on professional judgment and a reasonable basis. Estimates are not required to be disclosed in most cases. Disclosure, only sometimes. In a case where you have a disclosure requirement pursuant to regulations, the IRS has a few of those. There's a form to fill out, and of course that means we have to do that. But otherwise, disclosure to taxing authorities usually is not required. May advise departure from consistent treatment in certain cases. What does that mean? Facts and circumstances of a case whereby the normal treatment of a certain issue may be one thing, but because of certain differences in tax and circumstances, you may advise your client on a different treatment. Key points of statement number 3. Tax advice. Again, professional judgment. You must encourage, or consider all relevant tax law. And of course, you need to encourage your client to abide by such tax law. And documentation is important. They emphasize it. Whatever basis you're using for the tax advice you give, you need to document it and have that available. It's interesting that the standard does not require that you inform your client that you gave tax advice of any subsequent developments that may change that tax advice. You're not required to inform your client. Of course, you use your professional judgment in this case to look at what those subsequent developments have changed and what the impact would be, and then you need to decide on whether you're going to tell your client that or not. The final standard, number 4, tax representation, whether it be audit, whether it be tax court, or whether you're at the side of an attorney at district court, technical competence is required. And that means the technical competence not only of you as a CPA and a tax practitioner, but also your technical competence in the issue that's at hand. Competence is defined in the AICPA Code of Professional Conduct, and that's specifically referred to in this standard. And it also requires you to comply with all your regulatory obligations. And that's pretty much it in a nutshell. We've got some resources for you that are on the NCCPAP website. Pipeline Acceleration Plan publication is there, and the Statement on Standards for Tax Services publication is there. Please access these. I know this has been a quick presentation. I hope you found it interesting and informative. Next question is up on the board. If there's any Q&As, we can get to them at a later date. Thank you.
And thank you very much, Frank. And Frank, maybe you want to give 60 seconds as part of the Q&A. Just remind everybody kind of the driving force behind the CPA pipeline and the current problem in the profession.
Well, that comes by the National Advisory Council that was set up. And we know that the initiative was a response to the lack of availability of qualified people with regard to our profession. And there was a great deal of emphasis spent on why this is happening, what's happening, and what we can do to change it. And a quick breeze through that pipeline acceleration plan, plus the AICPA's website has some publications out there that kind of explain in detail what it is, and it even gives you a certain progressive, shall we say, flow chart of how all this happened. Very informative, folks, and I'm excited about this plan because it can really go a long way to helping our profession.
That's great, Frank, and thank you very much for a very informative presentation. We will now move on to the next presentation, which is by our NCCPAP Tax Co-Chair, Steve Mankowski. And again, I will mention a reminder, everything that Frank has spoken about today and Steve will speak about in the upcoming minutes. We will also be discussing at our national meetings this Thursday and Friday, which we encourage everybody to join in on. So without further ado, Steve, the floor is yours.
Thank you, Mark, and thank you, Frank, for the presentation. Just some areas that I'm looking to cover today, some of which will be a little more cursory, some will be a little bit more in depth. Also a little bit more on the P10 update, e-signatures, employee retention credit, which has been a huge topic within the IRS over the last few months. ISBA, which is an ethical standards board that Frank spoke about last NCCPAP Now, an update on some beneficial ownership, and a little bit more in-depth look at what some of the changes are that the IRS has put into place with our Tax Pros account. So as Frank had mentioned, P10 renewal season opened October 16th. This wording is right out of the IRS. P10 is required for all tax return preparers compensated for preparing or assisting in the preparation of all or substantially all of a tax return or a refund claim. So there's always the question of some of the staff in your office, should they or should they not get a P10? Quite honestly, I tend to defer to the fact of I'd rather have a P10 for someone and have them not necessarily need to have it, as opposed to not having a P10 and then have an issue with the IRS where someone was working on something and didn't have a P10. The P10 for some of the staff wouldn't necessarily be appearing on a tax return, but it's still a question of judgment and how you want to go about it. And especially now where the fee has dropped significantly down to $19.75, it's certainly much more cost beneficial to us. We're supposed to be renewing our P10s by the end of the calendar year so that you are up to date, and that should be December 31st, 2023, that you need to be renewed by. Sorry for a typo. And that's so that come effective for the filing season 2024, that we all have valid P10s. The renewal screen has been updated within the IRS system. There's basically a few buttons that are available. One is obviously renew the P10. You can edit your information. There's a messages screen. Generally, once you renew, it'll come up telling you that you've renewed your P10 and giving you the proof of that if necessary. For those such as the annual tax return preparers as well as EAs, there's the necessity for including your CPE credits. And then there's a topic that I've mentioned more than a few times that's now much more prevalent on the P10 renewal screen, which is the returns that were prepared within your respective P10. The number is never going to be 100% accurate, but it's certainly one that if you know that you prepared 200 returns and this is telling you that you prepared 400 returns, there could be an issue that you may not be aware of that you need to look into. If it's reasonably close, I renewed mine Thursday during an IRS call when I found out that the window is opened, and was able to just update during the meeting about some of this. And the number that for me was a little bit lower than what I thought I had prepared, I move on because it's reasonably close. If I saw it was something vastly different, it would be certainly treated much more with much more emphasis. Digital signatures on non-electronically filed tax returns. The IRS started that almost 2 years ago, November 18th, 2021, which, as we all know, was during the height of the pandemic. And that was part of the IRS IRM 10.10.1. And at this point, that IRM has become permanent as of last week without any change or extension. So we are now permitted to use digital signatures on on those selected non-electronically filed tax returns. And at this point, we have polling question number 4, which will come up on the screen. And as everyone's answering those, I'm just going to continue on with the presentation, which at this point, we're going to do a little bit of an update on ERC. Employee retention credit is one that has been in the news. You flip on just about any radio station you've been hearing for months and months about, sign on with us, file your ERC claims. Well, the IRS finally, with a lot of emphasis by tax preparers and tax preparer groups, they issued a moratorium on ERC claims last month on September 14th, at least through the end of the calendar year 2023. Their estimate is somewhere around 95% of the in-house claims are deemed as being fraudulent. And I guess the good soul in me thinks that the number is way too high, but the cynic in me also says maybe the number is not high enough, because I've heard too many issues of fraud that have been going on, and clients getting contacted that had no necessity, no shutdown, no reduction of any of their income, so they really did not qualify for ERC, and they're still getting calls and have received, in many cases, ERC money. The statute for amending the returns is good through April 15th of 2024. The IRS intent, at least at this point, it is to not wait out the moratorium to coincide with the program running out. They are looking at hopefully early in January to continue reviewing new claims that may be coming in. Claims that are in-house, they are reviewing, and they are taking a much more in-depth look at those. Every time you look at an IRS website or any IRS emails, more and more information clarifying continues to come out, and seemingly every day. And it's one that if you're going to be submitting in anything new, I would make sure that you go back through any of the recent IRS releases to make sure that you're adhering to any of the changes that they may be putting through. If you do submit a return, the IRS will more than likely hold it till the end of December or whenever they open, and then proceed with the processing. Keeping in mind that we're encouraged within the IRS words to submit any and all pertinent supporting documentation justifying your ERC claim. The IRS, during our meeting last week, commented that you'd almost want to consider it as a mini audit on any ERC application. So there's a number that are currently in-house that you're probably going to get some sort of correspondence back from the IRS asking for additional information. It's not saying that your claim is fraudulent or is inaccurate, just they want to make sure at this point, before they continue paying out money, that the claims are legitimate. Two additions that have come out over the last week or so, and I give kudos to both two of our members, Sandy Zinman for getting this released, obviously Alex in the office for releasing it, as well as, I don't know if he's on the call today, Neil Sullivan had forwarded this to me as well. With these new additions, one is that the business owners had the ability to withdraw their claim, no questions asked, and they're also implementing a settlement program. Settlement program is for those who then have realized that they do not have a legitimate claim for ERC to be able to turn around and work on repaying the IRS for that claim. And it's certainly one that I would encourage all of our members that if any of your clients have had claims that you don't believe to be legitimate, you may want to read up on the settlement program and speak to them about it, because it's certainly one that, although the IRS hasn't said this yet, I'd expect them to be a little bit more lenient if you go to them and say, my claim wasn't correct and I need to correct things, rather than they come to you and say, by the way, Mr. Taxpayer, you owe us X number of dollars back. And we've been encouraging the IRS that any of the repayment claims that they want to make, the sooner they can start processing those and reaching out, the better. Because the longer the taxpayer and the business owner has the funds, the greater likelihood that the money's going to be spent on something, and mostly legitimate business issues. Now I'm going to shift gears to ISBA update. That ISBA is the International Ethics Standards Board for Accountants. Quite a mouthful. If you remember, for those that had tuned into the last NCCPAP Now, Frank Sands had spoken about this at length, including some major issues that we at NCCPAP had regarding several of the clauses within the release that they had. NCCPAP has submitted an extensive comment letter, and at this point, the revisions that have been made to the drafts have included what we were ultimately looking for. The language, and they've changed paragraph numbers as all of this has been changing, but it's now that the public accountant only refers or recommends or refers a client to a third-party provider for tax planning services. The provisions do not apply. Significant change. In the past, it had been set where if I referred a client over to Frank for work that I was not qualified to handle, I would still have liability for Frank's work. That was one that I've spoken with a number of people within ISBA, and it was not the intent that that would be the case. And the fact that they've changed the wording so drastically just shows that that's not the case. Now, of course, this isn't final. This is still an exposure draft that's been revised. And I was also told that there's a group out of England that actually wants the wording back where it had been before. So it's still school's out on this. So we just need to be patient, but know that there's some things out there that could be affecting us within our professions and with referrals. Beneficial ownership reporting. Again, during last month or last NCCPAP Now presentation, we had Melanie Lauritsen, who's now the VP of Tax within the AICPA. And a lot of what came out of that presentation was any of the questions that were being asked were a lot of questions that were things that we've already been asking, and that the answers weren't known, even though this is going to be effective as of January 1st of 2024. There's been some changes and some things that just seems that the more you know, the more you need to know. So what do we now know? The idea of a one and done is gone. What's a one and done? That's a taxpayer or husband and wife maybe have a rental property that they purchased in the name of an LLC. The initial thought was, well, we do our beneficial ownership reporting one time. There's not going to be any change in ownership. We're not planning on moving. Nothing's going to change. It's a one and done. Well, now it's come out that part of the filing is including driver's license numbers or passport numbers that they get renewed every so often. You renew your driver's license, you now have an update that's required to your beneficial ownership reporting, that you have a 30-day window to make the changes, or be subject to the penalties of $500 a day up to $10,000 maximum per incident. They've adjusted some of the classification for what is a beneficial owner. And at this point, I'm happy to report that tax prep, bookkeeping, outsourced CFO is not subject to be deeming a beneficial owner. On FinCEN's website, they do have 23 exceptions, which does include accounting firms for work that we do for our clients. It does not exclude accounting firms of filing beneficial ownership for our own practices, our own businesses. Some more of what we do know is that they're really focused more on what's deemed as being substantial control, being able to hire and fire staff, sign for business loans. If you have that authority within an entity, you have you're a beneficial owner. You're a beneficial owner for that company. General counsel is deemed as being a beneficial owner, but again, bookkeeping and tax do not have to file and are not deemed as beneficial owners. What we still don't know, changes. Do we have to redo the entire report or just report the changes? We don't know, and it's getting more and more difficult as the time keeps ticking away. And really, what's the status of the FinCEN filing software? Will it be ready as of 1/1/2024? That is more of the great unknown. Fortunately, the AICPA and NCCPAP has also been part of a coalition dealing with beneficial ownership. And at this point, there is a client-facing flyer that's available through the AICPA. They do suggest and highly recommend a separate engagement letter and a separate fee for preparing this work. They do have resources and FAQs on their website. And about maybe 10 days ago, Aon, who's one of the primary insurance providers for malpractice within the AICPA, has released that risk alert that they've reduced the risk associated with the beneficial ownership. Initially, they were telling us to really take a hands-off. Now they're realizing that it's work that, although it's not necessarily accounting or tax related, it's maybe not legal related, and that in many cases, we as the trusted providers have much more access and much more knowledge of the business than maybe the legal counsels do. Two questions that I'm still trying to get answers to, which I was hoping I would have by today, but unfortunately, things don't work that way. One is the rules for when someone would have to file is when they're acknowledged within their Secretary of State or Department of State. One of the questions that I've since posed was, we file, at least in my state of Pennsylvania, we file fictitious name with Department of State. Is that going to then justify a beneficial owner? Because you could certainly tweak things in a certain fashion so that you may be a sole proprietor, but need to have this reported. And the other is one that we, as CPAs and trusted advisors for our clients, and this is going to be more of a rhetorical question, but it's one that I really do take seriously. If one of our clients comes in and we start talking about setting up a new business for that client, their first comment's going to be, okay, I guess I'm looking to set up an LLC. We're now going to have to really have a little bit more knowledge and a little bit more information. It's not just, yes, set up the LLC and you'll be good. Now it's going to be keeping in mind, you set up an LLC, you have filing requirements with FinCEN on your own, whether it's you as a single member LLC. So now our advice may not be as simple as, yes, set up the LLC and you have your liability protection. If they're not made aware of these filings, it can be much more involved in, and we could be opening them up for some significant liabilities. And At this point, I'm going to ask our back crew to just put up an IRS PDF. Thank you. During my monthly IRS meeting last week, they went through the Tax Pro accounts. I'm just going to cover this briefly because it is going to be covered and it is available inside of the slide deck. I think that they made that available. But it's one where it's a new self-service portal that the IRS keeps enhancing. And it's one where, as we start going through, you can see that they've really taken a lot of the feedback from individual and tax preparer or tax professional groups such as NCCPAP in hand for this. So this has been in the works for probably the last 5+ years. And they've actually now gotten to a point where, as of August, we're able, once we have our CAF number inside, they're going to be able to link all of the filings and power of attorneys that exist under our under that for any of our clients into this portal. Not only that, we're going to have the ability that if we no longer represent a client, or if it's closed periods that you really have no need to go back, we can actually, through that site, go through and withdraw an authorization, keeping in mind that once we withdraw an authorization, there is a notice that does get sent to the taxpayer, but that's an easy explanation. Just tell your client that, yeah, that was something that it's long since been resolved, no need to keep that on file. And they've also now included, as of the September update, the ability to see balance due related to different clients. I know they're still working on getting copies of notices out there for related to the various clients. That's one that I know I've mentioned a number of times, that if I have power of attorney, that as soon as I get linked into their account and have a truly registered link to them, that any of the letters that have been sent out to them for periods covered under my power of attorney would be available for my viewing out on this portal. It's certainly one that would save a number of phone calls and a lot of time into the practitioner priority line. And we can hop to the next page, please. And this is just the cover page. You can request POA, request taxpayer authorizations. We can access transcript delivery systems. And they did have a box where with notifications. That's something that's new into this, and that's why they've highlighted that in red. You can go to the next page, please. Again, the items that are new, link your CAF number, and also steps in there in requesting a PIN, an IP PIN, and entering an IP PIN. So they're all, again, that's items that are new. They won't be in red on your screens. These are just in red to identify, for our purposes, these were changes that have been made. And the next page, please. And this is just further information on the requesting the PIN. And on the right side where we see the active authorizations, in the past, you used to have to, and I forget the publication, but there used to be a form that you could file with the IRS that they would send you a listing of all of your active authorizations. Now it's going to be available right through your tax portal, and you have the ability to address, remove, etc. And also one that if it's also an easier way that if you're representing a new client or a client in a new matter that you've put a power of attorney out, that you would know that it's been accepted without just realizing it when you call a practitioner priority line. Next slide, please. And this is just giving some of the details. In this case, Mary, it's just showing a number of different forms and returns that have been filed for her. And down in the lower right-hand corner, just talking about withdrawing authorizations. We can hop to the next page. and that's saying, yes, do you want to withdraw? And you don't even have to give reasons for withdrawal. And then that's saying that the application was withdrawn and gives dates and so forth. If we hop onto our last page, this is where we talk about the balance due portions, where it's telling you what's out there, what it relates to, what years. So it's certainly one that once we're set up within the client, this would give us a lot of information that we're normally sitting and scribbling down as we're talking to people in the practitioner priority line. We're asking them to put into our secure mailboxes. This is getting us a lot of this information much more readily and much more user-friendly ability with the data. I think that was the last page for that. So questions there. So if we can just hop back into the presentation. And again, these slides, they have been approved by the IRS for distribution. So it is one that you do have the ability to go through and look at those and use them within your offices. And if you haven't already done so, I would highly recommend going through with the ID Me and getting the access into these portals. It's certainly one that can really help your practice and help you deal with your clients that much more efficiently. And at that, I don't know if there's any questions that are out there, Mark.
Well, and thank you very much, Stephen. One thing you might want to expound upon a little bit with beneficial ownership is the importance of engagement letters. And I know Aon even suggested if you're not doing this service to include it in your engagement letter affirmatively, so you have an understanding with your client that the requirement is out there, but you might not be working on it. So maybe you want to expound for a minute on how important that is to beneficial ownership.
The part with beneficial ownership that makes it incredibly difficult for us as CPAs, and I know I'm preaching to the choir when I say this, but inevitably there's a handful of clients when they either send in their data, meet with us, drop off data, say, oh, by the way, I formed a business this year, so here's the records related to my business. Or if you send out organizers, they check off that they formed a business. If we need to be proactive with notifying our clients about beneficial ownership, and as such, we just can't send it simply to our business clients, because yes, the business clients need to be aware that there's a filing requirement, that if you're an existing business as of 12/31/23, you had the entire calendar year, and you have to report changes within the 30 days. If you're a new business formed during 2024, you have a 30-day window. That second part is the one that's the scary one, because we can have a client that comes in and say, like, oh yeah, I formed a business last year. Well, if they didn't, that's fine going into 2024. If that happens during 2024 and they're not aware of the beneficial ownership reporting, they're going to be most likely looking at $10,000 fines. And I'm pretty sure that they're not going to be subject to first-time abatement. So it's one that not only having separate engagement letters covering that specific engagement to prepare that form, which is well over 50 pages to prepare, but also keeping in mind in your regular engagement letter for individuals and businesses, we're going to need to include a paragraph. And I'm sure if you download the engagement letter drafts from the AICPA website or speak to your insurance carriers about engagement letters, they'll have wording inside of there that talks to the beneficial owner reporting. And if it doesn't, you certainly want to make sure that you question your insurance carriers if they have clauses that they want or that they would request that we include in with any of our engagement letters, any mailings that we may do, if we do newsletters that reach all of our clients, just how they want us to get the word out there. And this is probably one that it's not even going to be need to touch them 3 times with it. It's going to be repeated and repeated and repeated.
Excellent,
And
Steve.
just
Yes.
and one last point, not on my slides, is that we need to keep in mind the rules for the 1099-K have not changed at this point. Whatever was effective last year, the IRS delayed the reporting requirements until 2023. As of now, there's been no changes. We're still at that $500 threshold with no amount of transactions. So a number of our clients are going to be having and receiving 1099-Ks that have no idea what it relates to or what the basis is for the items that they sold. And that we're going to need to be proactive with our clients related to that, unless, of course, the IRS or Congress gives us a reprieve on those.
Excellent, Steve. Well, thank you very much. As always, a very informative and great presentation. I appreciate all you do for NCCPAP. So thank you very much, Steve.
Thanks.
Polling question 5 is on screen now. Again, you'll have a minute or so to answer. So please take a moment to answer that polling question. While you're doing that, we're going to move on to our last presentation, which is by Neil Fishman. I'm sure all of you know Neil. Neil is a past president of NCCPAP and our current PR chair. And he's going to do a presentation for us on occupational fraud. So Neil, floor is yours.
Thank you very much, Mark, and welcome everybody. Before I get started on the slides, I do want to tell a little story about when I first started working for my father, and I was up in New York at the time. And one year, and it was actually around this time of year, we went into Lower Manhattan to the College of Insurance because you attended their program, you got a discount on your liability insurance. And they showed us a video about this accounting firm that was being sued by a former client that they'd only had for a couple of years. The reason they were being sued was because they did not catch that an employee had been stealing from the company. Well, turns out that not only was the employee stealing from the company, this employee was the direct assistant to the company president, who was in turn stealing from the company, and they didn't catch that either. So, bearing that in mind, we talk about here occupational fraud, the fraud triangle. So as we start, let's go back to a man named Edwin Sutherland. He was a criminologist at Indiana University, and he was interested in fraud committed by the top business executives, and he actually coined the phrase white-collar crime that we are all very familiar with right now. And then one of his students, Donald Cressy, took that further. He went into focusing on the embezzlers, the people who were trust violators. He developed the hypothesis that we know today as what's called the fraud triangle. And I'll show that in a moment, because, you know, when anybody is starting a business, they're doing everything. And then as their business grows, they hire people, and they hire Tom, Dick, and Harry to handle sections A, B, and C while they focus on section D of the business. And it is more common for people to say, you're in charge of this, let me know if there's a problem. And if there is, otherwise, leave me, don't bother me unless something comes up, unless we have our periodic meeting to tell me what's going on. So right now what we have is known as the fraud triangle. And this is it right here. And as you can see here, the 3 sides are the person has a pressure that they perceive. They need money. Something has come up. They perceive they have an opportunity that they can take advantage of. They have access to company funds. And then, of course, the third part of this triangle is the rationalization that, well, I did this once. I'm going to pay the money back. I'm not going to do it again. I needed the money. That is their rationalization. So that was the very basis of the fraud triangle there. But we move to the next slide. we will see that we can morph this triangle actually into a diamond, because we still have the incentive, the pressure, we still have the opportunity, but more importantly now, we have the capability, and we still, of course, have the ability also to rationalize what we're doing. Why is the employee stealing from their employer? Now, continuing with the fraud diamond here, we can break our fraudsters, our employees into two categories. We have the accidental fraudster and we have the predatory fraudster. In the case of the accidental fraudster, going back to the triangle, we have the pressure, we have the opportunity, we have the pressure, we have the opportunity. They all of a sudden found themselves with a lot of bills that they couldn't pay. Their car broke down, something came up, a medical crisis, a family crisis of some kind. And in the case of the accidental fraudster, their attitude is, yes, I'm going to do this, I have access, but I'm going to pay it back. That's the most important thing. They're going to pay it back. And in some cases, they do pay it back. They get themselves back to where they were. Everything's clean. They pay back what they can, but they paid back what they took. But then what happens? All of a sudden, they find themselves in the very same situation. I got away with it once. Maybe I can get away with it again. That is the accidental fraudster. Then you have, as you can see here, the predatory fraudster. The predatory fraudster already has the negative attitude where they're working. And they're doing this because they can. They're doing this because they perceived some slight at work. They were denied a promotion. They were not recognized for something that they had accomplished. They were not given a raise. And their attitude is, I've given my loyalty to the company shows no loyalty to me, no appreciation to me, so now I'm going to be out just for me. So they have, in this case, the criminal mindset. They have the arrogance, and that they can get away with this. Again, they have the pressure. They have the opportunity. Remember, it comes down, all of this, to basically two words. Those two words are internal controls. And more importantly, with those internal controls is, first, are there internal controls? Second, are the internal controls implemented? Thirdly, are the internal controls periodically being reviewed? Who has access? Again, going back to what I said a few moments ago, you hire people, you say you're in charge of these aspects. Are you overseeing them? Who has access to the bank accounts? Who has access to the inventory? So we take this triangle, and now we turn this into a pentagon, because again, you have the perceived pressure, you have the perceived opportunity, you have the competence, the ability to do it. You always have that rationalization. And then lastly, and most important to complete this pentagon, is you have the arrogance that you can do it. You can get away with it today. You can get away with it tomorrow. You can get away with it anytime you want, because nobody is checking on you. Nobody is making sure that things happen. Everybody remembers the movie Catch Me If You Can, Frank Abagnale. And when he was working with the FBI and showing them how the checks were bogus. So not knowing how to get away with things is important. Knowing how a company operates. And obviously, if somebody is there longer, or the longer that they're there, I should say, the more they can see the cracks within the system, the more they can see the opportunities within that system that they can take advantage of. So when we're looking at our employees, now, first of all, I must stress that you cannot just have a company investigate an employee for the sake of investigating them. That is known as intrusion into seclusion. That is not allowed. You have to have a reason for having an employee investigated. Now, we're not just talking the general background checks, we're talking something a little more significant. So what are the things to look for in employees? And here is a whole variety of issues that we can be looking at. So first of all, and these are in no particular order, do we have an employee who's constantly complaining about that they're constantly under pressure, that they've got family issues, they have dependency issues that we know about, that they're living beyond their means, every now and then, like everybody remembers in high school, they have those votes at the end of your senior year. And of course, one of the most popular ones is who's most likely to succeed? Who is the golden child in the family? If they're that case, they may perceive that they have to succeed, that things are not happening as quickly as they want them to happen, and they have to make them happen one way or another. So they have living beyond means. They're having financial difficulties. You have employees that have very good relationships with vendors or customers. You see a lot of work going to some vendors that couldn't necessarily be spread out through a variety of vendors that you're dealing with in your business. The same thing with customers. Certain customers are being given breaks that are not necessarily deserving of. We look at control issues. Again, who has control of situations? With every responsibility, there should always be two people who know how to handle a certain aspect. You have one person who is the primary, and then you always have a backup. Because what if the primary person is out sick, is on vacation? What if they leave and they go elsewhere? You still need somebody who can step in and handle those responsibilities, either temporarily until you find somebody else or until you move somebody into that position. And again, with these people with control issues, they're not willing to share their duties. When you ask them questions, how are they responding? Are they irritable? Do they get very defensive? Do they get very defensive when you're asking them is, why did you make this decision? Why did you act this way? We talk about employee problems and the issues they have. Do we know if they had any problems with previous employers? Today, most likely we do not, because as we know, the worst thing that a reference can say about a potential employee is when they're contacted to ask, did John Smith, what can you tell me about John Smith? He says he worked for you from July of 2018 through September of 2022. The worst thing that the previous employer, if they're put down as a reference, can say is, I can confirm, is all they can really do is confirm that they worked in that period of time. Because if they say anything else and that prevents them from getting a new position, well, unfortunately, today we live in a very litigious society, and people will file lawsuits at the drop of a hat. So what else can we talk about with our current employees? So first of all, does an employee refuse to take vacation? Are they taking any personal days off, or are they there every day? Are they the first person in? Are they the last person to leave? Now, are they there when nobody else is there? Because when nobody else is there, who knows what, if anything, is going on? When I have spoken about occupational fraud, one case I came about was about a gentleman who was the manager of a sporting goods store. So he would get there at 7 o'clock in the morning. He would let a couple of friends come in and let them do their purchases before the store opened up, before anybody else got there. And he did not record the sales. because he was the manager, he was able to cover up inventory. He was able to hide what was going on. He was able to manipulate the cash register to make sure that those sales were not being recorded. He had these people come in and they paid cash versus running a credit card. Does your employee have pressures within the organization? Do they complain? Again, about their lack of authority. Were they denied a promotion? These are things that we may not be aware of. However, it is important that we make sure that our clients are aware of that, to keep an eye on their employees, because they have to say that something is going on. They have to let us know that there's a problem. And then it is for us to decide, if this is a client, whether or not we can handle it, or if we need to bring somebody else in, a third party with a fresh set of eyes, with a clear perspective, that their position is not clouded by the fact that this is their client. It is very important to make our clients aware that they have to be the initial watchdog. I mean, as we're doing the work and we're reviewing the activity, we may see something, but of course, we point this out to the client. We see a lot of payments going to this one particular vendor. We see that some companies will offer, and I know this from public services, that a lot of times municipalities will say you can only have so many hours of vacation time on the books. So they either force you to take vacation, or in some cases, they will offer you a lump sum payment to clear out the payroll, or to clear out the vacation hours, get them back down under the amount. So we, looking at the books, we may see these things. We will keep our clients aware of this, and it is up to them to let us know if there is a additional problem that needs further investigation, and whether or not we should do it or not. So Mark, do we have any questions on this?
One thing, Neil, maybe to
Yes.
expound upon, because, as most NCCPAP members have, relatively small clients and small business clients. And just a little bit of the unique nature that small clients with few employees have in this fraud area versus larger organizations.
Oh, so again, with if you have fewer employees, there's less differentiation of responsibility that you might have in a larger organization. It is easier in that respect for somebody to manipulate, but then again, with fewer employees, again, who has the responsibility? Who has the authority to move money in and out of accounts? Who has the authority to sign checks, to issue payments? We have to take a look at that. And again, we're reviewing, who are we doing business with? Do we see that there is a lot of activity with one particular vendor? I mean, again, I'll just use this as an example, and it's, there used to be Staples, there used to be Office Depot, there used to be Office Max, there used to be Quill. They all used to be separate organizations. Now, I believe Staples and Quill are one. Office Depot and Office Max are one. There are fewer players in the game in that respect. And are we constantly dealing with one particular vendor when in other aspects there could be 3 or 4 others? Are we looking out for supplies for whatever we need? Are we making sure that we're getting the best deal possible for that? Remember, the relationship, especially with vendors, is if you're constantly giving them the same rate or they're paying the same price, there might be somebody out there who could do it for less. Remember, the employees have a fiduciary responsibility to their employer. So if I'm the purchasing agent for the company I work for, I've got to find the best deal for what supplies are needed. Now, if I know that my boss is willing to pay $2 a unit for certain products, and I find a vendor that will only charge me $1 a unit. If I am of the unscrupulous nature, what is to stop me from forming a shell company of my own, saying to my boss, I found this new company, they will meet your price. So he pays that company which the employee owns and operates, now goes to the supplier, says, I'll meet your price of $1. They buy it, they turn around, they sell it back to their employer. They've just pocketed half the money, for argument's sake, as opposed to telling their employer that they could save them money.
Thank you, Neil. And Cheryl has a question. She says, stealing of inventory has been an issue. Any security plan suggestions in the inventory area?
How often is inventory being checked, first of all? And who is the person, how many people are in this company? So who is, say, there when the inventory is being delivered? Is there somebody else who is then periodically checking the inventory to make sure that the counts are accurate? Now, if you have the same person checking the inventory, keeping track of the inventory, it is very easy for them to manipulate the inventory. If you have 2 or more people, it is a little more difficult. It can be done. It is a little more difficult. I mean, are people familiar, and I know nobody can answer, story of Farmore Pharmaceuticals? Farmore Pharmaceuticals, they had warehouses all over the country. The firm that was doing the audit made the mistake of letting Farmore know which warehouses they were going to be inspecting. So those warehouses were stocked to the gills, to the rafters. The other inventories were empty. The more famous one, especially for New York, is everybody remember Crazy Eddie? His prices are insane. Eddie Antar, Sam Antar, his brother, his cousin. Sam Antar actually spoke at the symposium, has spoken at the symposium in years past, and how his cousin was stealing from himself. When they did the inventory counts, they showed all these boxes, but nobody bothered to check the boxes when the company went public. Turns out all the boxes were empty. Eddie Antar fled to Israel. Sam Antar was left behind. He got the knock on the door. This is the FBI. And Sam Antar did the smartest thing you could do. He basically said, what do you want to know? I'll tell you everything.
Yeah, but unfortunately, the sometimes moral of that story is crime pays, because Sam now makes a good living doing a tour speaking on this very subject.
Him and the gentleman, Frank Abagnale. He is FBI and all these major corporations. It's a true snow. If you watch, again, at the end of that movie, you hear how he is, at the end of the movie, you see the captions of now how he's consulting with all these Fortune 500 companies.
Amazing stuff. Well, Neil, thank you very much for a very informative presentation. We appreciate it. Poll question number 6 is now on the screen, which is the last poll question. So please take a moment to answer that question, please. So an anonymous attendee, Neil, said, Neil, I appreciate your comments. The problem is that I'm not a detective. I might notice some irregularities, but in general, if it appears they'll be held to the standards that are impossible to uphold, I think our emphasis should be on limiting our liability rather than wholeheartedly. And I apologize, this gentleman's, the end of his message kind of trails off a little bit. But yes, anonymous attendee, that is correct. there's only so much you can do in this area. You just have to follow the standards. As you know, an audit, if you're doing an audit, is not absolute assurance, right? There are reasonable standards that we're held to.
And if you believe it is beyond your ability, that's when you bring in a third-party firm. There are those firms that just do forensic examinations, forensic audits.
Correct. And you loop back to earlier, we spoke about third-party referral. So again, Neil, thank you very much. I really appreciate it. Thank you to all of our presenters today. We really appreciate the detailed information and all the explanations you've given us today to help us in our practice. Again, thank you to everybody behind the scenes that works on NCCPAP Now. We appreciate your work deeply as well. Thank you all very much for attending. Again, we look forward to seeing you either in person and on Zoom this week at our NCCPAP national meetings and also at our ATS conference coming up in mid-November. On behalf of everybody, thank you very much. Hope to see you soon at a future NCCPAP Now event.